Okay, everyone, thank you for joining me on this second live session of this afternoon. So it's 3:30 p.m., 13th of June 2024. So beginning on the DXY, nice reaction out of this daily demand as we spoke about on the 4 hour time frame. Again, once more, the fact that we closed above here indicated that price wanted to go bullish. It is looking like it's doing that. So that's very, very nice to see that the analysis is playing out. So this high is potentially next on the cards to be taken out. So remember on GU, I was talking about this potential buy setup. However, I said that I was very wary of the setup against selling the dollar because the dollar has broken bullish structure. So one thing to remember at all times is the fact that the dollar is the world reserve currency. Okay, so what does that mean? Whatever the dollar does, we should take that as gospel. In other words, okay. So the fact that this has set up for a buy, but so has the dollar, I would rather put my money on the dollar and the dollar's market structure, personally. So this could potentially be a fake out, which it would make sense again because we're very high up in the leg. We've got liquidity right here as well. Look at all of these lows. And also the fact that, if we remember on the previous live session, I said that what I'm waiting for and what would be nice is a pullback of that entire leg. So from the low to that high. And we could have that because that liquidity is right there. Let me just go to the 4 hour. Make it visible on the daily. So that would make sense. It would make sense. Now, for this to come down, it's very, very possible for it to do that. And also the fact that we've come into this monthly resistance and weekly resistance is more than likely going to have some sort of pullback. So hopefully we can get that going into next week or even for the rest of this month potentially. So obviously these are weekly candles now. If we can have this bearish price action to now roll over, that would be very nice. Because from here, as we spoke about, this is looking a little bit messy at the moment. Let me take that off. So from here, what we spoke about is the fact that we have this daily level of support within the discount of that entire leg. So that's a perfect scenario and what we want to look for. Let me take that off. What we've also done is tapped into that daily resistance right there, which coincides with the weekly because you've got a red level at there, look. So that's weekly bodies, number one, and number two, it's also daily bodies. So it's a very significant area. And what we've also done is wicked into that high, closed below. So we could be in for a pullback right now. All right. So that's pound dollar. Let's go to pound yen. So pound yen, if we go in the weekly, what we've done is we've took out the previous weekly's high. We've had that wick to the upside. I would prefer to see a pullback on the pound yen as well because of how bullish we've been. It would be nice to see that pullback happen. And if we close like this or similar on pound yen tonight, this evening, then that could be a good indication that we potentially want to come down bearish because that would be a bearish candle closure, especially with that wick to the upside and wicking that high, especially how overextended we are. If we can see a pullback to take out that low, and then run into that daily imbalance, that would be beautiful because that would be a 760 pip move from the current market price. Now, for us to actually get involved in that, what I'd want to see is some bearish structure begin to form, which we haven't done yet. But like I said, the first sign of a potential pullback would be Well, it's already happened, to be honest. Number one is the fact that we didn't close above this high. We only wicked above it. And number two would be if we close like this on the second day we've done this, but now we're going to close bearish potentially in 6 hours and 24 minutes. So that would be a second reason as to why we want to come down. Third reason, we're very, very overextended. So we haven't had a significant pullback since the beginning of May, so over a month ago. All right, so over a month ago. As we can see, if we just look at previous price data as we sort of make higher highs on the daily time frame, we do continue up, but we see some sort of pullbacks. We've had that right there, but I would like to see a discount of that low up into the high, somewhere around here. On a weekly perspective, we've got that area down there, could be acting as weekly support. On the daily, we've also got that right there as well. So 2 daily bodies, just there. So 191948, something around that region would be very, very nice. So that's GJ. If we just have a look to the left-hand side, I just want to double check something. So if we remember as well, this is the weekly imbalance that we're coming out of. Let's mark this on as sort of a thicker line right there, and right there as well. Oh. So that's a weekly imbalance. We had liquidity resting below as well, like so. So if we scroll to the right-hand side, we can see that we're within this area. This entire area right here is where we're still trading within. So we've got reason to pull back. We really, really do. And not only that, we're also within a monthly imbalance too. Like so. That's the low right there. Let's just make that orange. Same thing there as well. So that's the imbalance. Orange line to the orange line, scroll all the way to here. We're within this area, okay, within the weekly as well. So we're in a very interesting point for this. So let's just take these off. So it is something to keep in mind, especially when we're printing price action like this right at these highs. It can't just continue up and up and up forever. It's going to have a pullback at some point or another. Okay. So yeah, just a waiting game for this. We've also got a 4-hour imbalance down here. This is the only imbalance on a 4-hour perspective since this low was printed. Now, this is 225 pips away. So in this entire leg, let me just make this a little bit clearer so you can understand. In this entire leg, remember this is only a miniature leg within this entire bullish daily leg. In this entire leg here, which is from the low to the high, is 411 pips. This is the only available 4-hour imbalance. We need to look at imbalances as magnets. So price could be magnetized down into there. And what do we have above that? We have liquidity. We have a low resting above that imbalance. So what does that mean? Well, traders that have gone long, they're going to see that as a swing low, and they're going to put their stop losses below that. But understanding the methodologies that we know here, what's below that? A 4-hour imbalance or a 4-hour magnet. So could be a very nice move to the downside if we do get that. If we set up here for a long, I'll take the long position as well, because you know, on a 4-hour perspective, we'd also be bullish as well. So following that structure from that low to that high, I can actually update these now because this is more valid structure. Like so. So I'm just going to take these off a moment, these red lines. There's some support and resistance there, by the way. You've got the arrows. Remember the bodies of the candles. This is on a 4-hour time frame. You can see what price came into. That prominent high right there. 4-hour bodies bringing it all the way through. Price pushed through right there. And used that as support to then go away. It then used it once again, which was also coinciding with the weekly area. So if you remember, let me just make this visible on the 1 hour and the daily, just so you can see what I'm talking about. This red line is the weekly bodies that were created, that it used as support. So if we go back to the weekly, that's those two bodies right there. Bringing it through. Really, really nice area of support right there. So you can see why and how the market sort of drags down into certain areas and then springs off. This is what I like about this way of looking at the markets, because you can really get into the details of why the market's done certain things in a simplistic manner as well, because it is just support and resistance, just on a multi-time frame analysis perspective. Let me take this off the hourly and daily. So that's what I'm looking for on GJ. Obviously we are still bullish technically, but we'll have to see what we do at this high. If we close below here for the second day in a row, then we could start to see a pullback. Let's look at euro dollar. Euro dollar, nice reaction out of that weekly area, as we said about right there, the weekly bodies together, just there, look. This week has reacted from that, so it's pushed into there and moved away quite nicely. Where has price come into? If we go to the daily time frame, price came into this area right here. Okay. Again, you can see the bodies are being respected at the low, respected. Again, once more, respected the bodies. And again, once more, move away. Just there, look. Bringing it all the way across. On a 4-hour standpoint, what we've now done is come into this level of support on a 4-hour time frame. So it's kind of breaking point now, I would say, because judging on the DXY, that high could be vulnerable. If we're taking that knowledge over into euro dollar, this low could be vulnerable now. Yes, we've reacted off of this daily, but we've reacted from a weekly, which is stronger than a daily. So understanding that, we could be coming down further, potentially. Just until the dollar does what it wants to do. I mean, what we could do now on the dollar is do this. So we've come into a premium of that leg to the downside. We've come into 56.18 premium on a 4-hour standpoint. We've got an imbalance all the way up there, which is also a liquidity POI actually. So I'm going to mark that on there. What do I mean by a liquidity POI? Let me just mark it on and I'll explain. So that's a 4-hour supply right there. So this is a 4-hour supply that it's also a liquidity POI. So what I mean by that is, you see how it took that high before breaking in the other direction and continuing down and continuing down. So it took liquidity before doing anything. So this is the liquidity point of interest. And it's also a 4-hour supply. So this is the 4-hour time frame. This is the last bullish candle before a bearish move. And not only that, we also have a 4-hour imbalance right there as well. So let me just zoom in a moment. Okay, just there, look. 4-hour imbalance. There's the imbalance right there. So we could be magnetized back up into there, to be honest. That could be a very, very nice move. If that is the case, then what we're saying on GU could come true in terms of, see that low's breaking now. That's why sometimes you have to have a bit of discretion in terms of the dollar index. Like I said, the dollar is the world reserve currency, so whatever that is doing in terms of a technical analysis standpoint, I'd rather put my money on that, because that has the most weight involved in it. Because like I said, I seen the 4 hour break structure on the DXY on the dollar bullish. So why would I then go and buy GBP USD, which is essentially selling the dollar? Why would I do that? You can see prices coming down. The stop loss would have been below there, so that's the analysis playing out there. Anyway, back to what I was saying. If we do that on the dollar, come back up into there, that would then mean temporarily dollar bullish, which would then mean temporarily GU bearish, just until we come into here. Because once we get to there, it will be a case of, right, are we going to break that high? Are we then going to continue and break that high? We could see reactions from here, at which point this would give reactions from here and provide trade opportunities to the upside. So that's my thought process at the moment. But for now, there's no point predicting what's going to happen, you know, here, there and everywhere. We'll cross them bridges when we come to them. And that's sort of the best way to look at it, really. Obviously, we can't predict the future, but I'm going to be aware of that, and I'm going to be aware of what price does from here in comparison to the dollar cross pairs. Because like I said, if we get a reaction from here, or even if we trade up to there, then obviously that's going to bring all the dollar cross pairs down temporarily. So, you know, once the dollar gets into there, then you could start looking to take profits on whatever trades you're in relative to the dollar. So let's look at USD CAD. Again, just keeping in mind the fact that dollar is bullish. Looking at USD CAD, look at this. So this is what we marked on earlier on. This is now happening very, very nicely. So if we remember, I was talking about the 4 hour structure, the daily structure, low, high, higher, low, higher, high. Just a moment, guys. So bullish structure right there. Also 4 hour structure all the way from back here, even down here, look. Okay, lower lows, lower highs, broke that. So therefore that's the higher high on the 4 hour. We came down into weekly support right there, which was within a discount zone right there, look. Two bodies bringing it through, respected, breaks through, uses it as support, springs off. Daily time frame. Price has used that right there, that blue line. If we then go down into the 1 hour, price formed a bullish leg to the upside, had a pullback into a discount, found its feet at that daily level, and is now moving to the upside. So yeah, would have been a really, really nice trade on this. That would have been the entry right there, as we spoke about. 3 to 1, not bad at all. 3-pin formation. 3-pin formation. As you're starting to see, you know, this is the way I was trading as I first joined UKTA and my wealth club. Obviously, that's not a thing anymore, but I I obviously developed the system with GJ, which is still good. I'm trading that on my own capital, but I feel like this system right here, there's not so many losses. I personally don't mind taking the losses because I know over a long period of time that the winners are potentially, they are going to eat up the losses and give you profit on top. I know that, but from beginner standpoint, this is probably a better way to trade, and to explain and to analyze. And I actually really enjoy trading like this because it's simplistic, it's very clear because you can see, from using the candle bodies, from using the candle closures, from the higher time frame down, you can see where the market could potentially run into to find resistance, to find support, and all of that good stuff. And it does yield good results. So, as you'll probably recall, the first couple of months, we were doing really, really well because I was trading this way. Then I went more into a systematic approach, which again, like I've said, I am doing on my own and with my own capital and other investors. But in terms of, teaching and all the rest of it, this is definitely a more, it's a slower way of trading because you're taking less trades, which also means taking less losses, which is important. You're taking less wins, yes, but that doesn't necessarily matter because you're taking less losses, so you're still going to be up over the month or 2 month, 3 month period, whatever the case may be. So yeah, that's all really good. And also I just want to highlight the fact once more that following this system, so to speak, there was this trade that was available from the low, which provided a 11-to-1 risk to reward right here. So let me just replay this. So what happened was, now this was executed in April, but this was at the time I was developing a system. Sort of my eyes went away from this. Sometimes it happens. You do veer away sometimes with trading and other ways of doing things. But it's all about understanding what works consistently and continuously doing that. So this is something I've always come back to, but this basically fit the plan to a T because following these blue structure points on a daily, right here, look, so we had a low, high, high, low, high, 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 low. There wasn't a high low provided up until we reached here. That became the new bullish leg from this low to the high. We came into discount prices. Price reached this daily level of support, those two daily bodies, bringing them all the way through. Then on the 30-minute time frame, what do we see? 30-minute 3-pin right there, which would have been the entry. It was actually a 15-to-1, sorry, not an 11-to-1. And then stop loss is 10 pips below that low. So paying attention to this number here, so 22.9, we'll round it up to 23 and then 33. And then the TP is the bottom of the 4-hour candle that's right at the top of the leg, which was this candle right here. That's that purple box right there. So if I go back to the 30-minute, you can see that right there. Just targeting the bottom of that was a 15.2-to-1. Okay, obviously that did play out. So yeah, it's nice to see this still works. It always has done, and it's something that I've always been drawn back to. You can see that as well. That low has now been taken, so we did the right thing with staying out of the market and trusting the dollar index as the sort of a stronger form of confluence, rather than just seeing, right, this is a low, this is a high, it's pulled back, let's buy. Well, let's think a bit logically here. This trading against the dollar, what's the dollar doing? The dollar is bullish, so why would we sell the dollar? because essentially if we're buying GBP USD, we're selling the dollar simultaneously. So that's what I'm looking for. I do believe these lows can be taken. We'll see what we do tomorrow. I do believe we've got news coming out tomorrow as well. And we've got Canadian news tonight at 6 p.m. Yeah, 3 p.m. tomorrow. We've got some heavy US news coming out. So it'd be interesting to see if these lows can be taken. Again, it does make sense if we do that. Why? Because we're coming out of these higher time frame resistances. Weekly resistance going on the monthly resistance. So we could have pullback to then continue up to achieve that monthly imbalance right there. Just there, look, with liquidity resting below. So that's pound dollar in a nutshell. I hope that made sense. Please let me know if you do have any questions. I'm more than happy to answer and help as much as I can. But yeah, thank you for watching for those of you that did. And we will catch up tomorrow on the live sessions. So I'll be doing the afternoon ones, as you all know. But until then, keep an eye out for any trades that we post. I'm not going to be posting anymore now today because it's too late in the day. But keep an eye out for that. And always manage that risk. Okay. But yeah, thank you for watching once more. And I'll see you tomorrow. Thank you guys. Take care.